Avon Resources Limited is a gold exploration company with significant projects in British Columbia, Saskatchewan, and the Yukon. Trading on the TSX Venture Exchange, symbol ABN, and the pink symbol ABN-AF. Surrounded by world-class gold deposits and mines, Avon's 23,000 hectares Forest Kerr Gold Project is located in the heart of the Golden Triangle in northwestern BC. For more information, visit us at avonresources.com.
You're listening to HowStreet.com radio, available online at TalkDigitalNetwork.com. Welcome to HowStreet.com radio, the online source for market opinions. Here is Jim Goddard.
My guest is home ownership consultant Ross Kay from thewealthyhomeowner.ca. Welcome back to the show, Ross.
Hey, thanks for having me back, Jim.
The Toronto Dominion Bank has released a real estate study giving us all kinds of interesting numbers, but before we tell you what those numbers are, should we believe them?
Well, I just watched BNN. They had the economist who wrote that report on BNN. So you're talking, obviously this report came out today, so this question is timely, and obviously it's not one I was able to prepare for, because obviously, as all your questions, basically, I don't know they're coming. Might get the odd hint here and there. But this report by the TD economist, it's going to be received with great fanfare by people who are going to use the advice from Vita and Diana, are the two economists who wrote this. They're long-term economists with TD Banks. I can tell you that I have emailed them a couple of years ago several times criticizing them on their reports, that they were blatantly wrong. And in today's news, I'll tell you, Jim, in today's report with BNN, you could see they were nervous. She's been around a long time, Vita, and in this interview, it's clear that they were nervous. Now, they should be nervous because I can tell you the 6 questions this report intends to answer, all 6 questions are answered factually incorrectly. What you have here is another couple of economists who don't understand how the market functions. Now, when I look at this report, I see the Canadian Real Estate Association as the source, and then I see things like existing home sales counts. They don't tell anyone when they're reading the report that these are seasonally adjusted existing home sales counts, which, as you know in the show, I've told you before, you can't seasonally adjust real estate numbers because they're not they do follow a seasonal pattern, but not to an extent that you can seasonally adjust them with any reliability. And they show a drop of a 40% market drop in the Toronto on this chart, the first chart in question 1 of today's report. Anybody of your listeners go to economics.td.com and check this housing report. It's just released today. And then they've got a couple of red dots here indicating that provincial rule changes for the foreign buyer tax were the causation of the house price sales declines in both Vancouver last year and in Toronto this year. Now, they mention the fact that the mortgage lending environment has changed, that the Bank of Canada, the OSFI, has changed the rules that the banks have. But they imply that those changes had nothing to do with it. When I'll tell you, when I look at the actual home sales instead of the seasonally adjusted home sales, and when I take out the double and triple reporting that is included in the CRE accounts for the GTA, not the same problem in Vancouver, then you'll see that the actual drop in sales is a consequence of the October rule change that effectively increased interest rates 2% between October and May of this year. So that rule change that took place, the qualifying rate, they added 2% onto the qualifying rate. It went from 2.59% to 4.59%, and then again last week or a couple of weeks ago went up to 4.84%. In your old show from last fall, you'll hear me say that that change was going to cause a 17% reduction in the average selling price. I was on CBC last year, interviewed for CBC with Trevor Dunn. Again, your listeners can Google it, where I told him prices were going to be off 17%. Now, he misquoted me. He quoted me that I was referring to the national price, where my commentary was GTA price. But since GTA prices are now being claimed to have dropped, not 17%, I'll let everybody else make their own decision on that. Really, we don't have to guess at these things. So the drop in actual sales was a result of first-time buyers being removed from the market once the qualification rate became an impact on existing first-time buyers. First-time buyers who purchased in the spring in the GTA market of 2017 were already involved in the process back in the summer of 2016. They just didn't wake up on New Year's Day saying we're going to buy a house. They took moves way back last year and even maybe 2 or 3 years before that, getting ready to be at a point where they were able to buy. That mortgage rule qualification came in. They rushed out and bought the house before that mortgage rule qualification impacted their financing ability. And those people all bought and were out of the market by the time May rolled around. And in May, you saw a drastic reduction in overall sales in the GTA market. None of those comments appear in her house in this report today. What they say is the foreign buyer tax. Now, Jim, foreign buyers in Vancouver, what type of home were they generally buying last year?
Ultra expensive mansions.
Ultra expensive mansions. Exactly. Now, what we don't see in any of these charts from the TD Bank, or what we don't see on any of the charts over the Vancouver issue, are what's called compositional buyer mix. In other words, what type of buyers are buying in the market any given moment in time. If the first-time buyers were continuing to buy, then there would be actual sales attributed to those people buying houses. Their share of sales, in other words, out of 100 sales, how many sales were going to first-time buyers, changes over time. And it changes depending on the market, the interest rates, and they also go in groups. So there's a reason behind that, which I'm not going to explain on the show today, but there's a reason why first-time buyers get into a market at between a 12 and 18-month windows, and then by the time they've all bought, you've got to wait for the next group of first-time buyers to move in. There's a structural reason why that happens, but it's too long of a story here. So when you look at the compositional mix of both Vancouver of last year and Toronto of this year, you'll see that prior to the foreign buyer tax, first-time buyers had left the market. Their share of sales had drastically reduced. This caused the average selling price to reach its maximum growth rate, the highest year-over-year claims that the real estate boards were able to report. Then, following that, when the the foreign buyer tax impacted ultra-luxury class homes, those sales decreased. And you had and then the average selling price began to decrease because there weren't those expensive homes being sold at the same rate. I look in all of number one of this report today from this lady and these two ladies, and there is not a compositional sales chart produced. That's because the Canadian Real Estate Association has the exact same economist, is led by an economist who used to work at CMHC, who got trained at the same school that these other economists got trained at. They don't even know what a compositional mix is, and they don't know how to record it. If you don't measure the home buyers' compositional mix and the home buyers' geographical mix, then you don't know what's really happening with home prices, which is how house price illusion happens in the first place. Because no one measures the compositional mix because they don't know how to measure it. They've never had, if they did know how to measure it, then they didn't have access to the data to be able to break it down. And this is the same situation that you have going on in British Columbia right now with this rising condominium prices in Vancouver is what everybody's talking about. But they don't talk about the compositional mix that is causing that to happen.
And what is the mix and what's happening?
What's happening in Vancouver? I don't know if you need a break for this one before I start, Jim, or not.
Yes, we'll take our break right now, Ross, and start talking about the numbers that are real in Vancouver and why things are happening the way they are right after this.
Great, I'll pop my charts open while we're gone.
You bet.
I'm Bill McWilliam, president of Cascadero Copper, CCD on the TSX Venture Exchange. Cesium is one of the world's rarest metals with a growing industrial demand. Drilling is underway on our Tehran property in Argentina to prove up a cesium resource. Cascadero's patent-pending leach process has the potential to make Cascadero the lowest cost supplier of cesium in the world. Visit our website, cascadero.com, or phone us at 604-924-5504.
Glance Technologies owns and operates Glance Pay, a disruptive mobile payment technology now live in 16 cities in Canada and about to launch in the U.S. With revenues up 664% in the last quarter, Glance Technologies has the potential to be a worldwide leader in an industry projected to grow to $1.3 trillion in 3 years. Glance Technologies stock symbols are GLNFF in the U.S. and GET in Canada. Find out more at glancepay.com.
Welcome back. We're talking with Ross Kay. Ross, we keep being asked about how come house prices in Vancouver are falling, yet condo prices are rising. How is that possible to happen at the same time?
Okay, so how is it possible that it's happening? It's because the buyer mix, both compositional and geographical, is changing in Vancouver. And it changes a minor amount every single month over a long period of time until there's great consequences in your marketplace. The consequence that always takes place is what's called house price illusion, where an entire nation believes that the average selling price is going up because what they're hearing from everyone else. Now, it's in Vancouver's case, you've got people who started to argue against the Real Estate Board of Greater Vancouver and now are coming back and they're falling back into the old traps because they don't understand how a market functions and they don't understand how the data works. So let me explain something to you about Vancouver. I am going to, for this argument's sake, I asked the guys to throw me some stats here, and I asked them to give me March 2016 to March 2017 as a comparable. I don't really want to sit here and give you what's happening between March and July because there's wealthy homeowner members who need access to that information before everyone else, so they get to make a rational decision. But I don't have any problem giving you information from this March and a year ago March because what we're recording now, no one's going to hear about that until late in the fall or early next spring. So let's look at this period, March of 2016 to March of 2017. We know March of 2016 is when record prices were happening in Vancouver. It was prior to the foreign buyer tax being applied, and everybody was claiming crazy things like 40, 50, 60% house price gains, and it was in the news headlines everywhere. Where this March, we heard that everything was back to normal after going dead in the fall, and that condominiums now were the new hot item in Vancouver. Okay, now I'm not saying that condominiums are not a desirable commodity out in Vancouver right now, but I will tell you that there was a drop of 20% in the number of condominiums sold in 2017 versus 2016. 20%. Now, everybody's going to say, well, 20%, that doesn't sound too bad. But what your listeners don't understand is how the compositional mix and the geographical mix In other words, where those condominiums that sold were located and what price point those condominiums were being purchased at has changed drastically over that one calendar year. Your listeners are going to be shocked to understand. Where would you think, Jim, where do you think what location around Vancouver would have recorded the greatest house price growth in 2017 in terms of condominiums?
Perhaps Burnaby's Metro Town? I don't know. I'd be guessing.
And I'm going to say it was Coquitlam.
Because it got SkyTrain.
I am going to tell you it was Coquitlam. What's happened in Coquitlam is that the average, the price point that buyers were buying at now includes trade-up condominium buyers. Where last year at this time, most of your condominium purchases were being purchased by first-time buyers. There is a threshold, Jim, at each category of buyer, and that threshold is dictated by how much money they can borrow from the bank. Now, we know how a market works. We know how to calculate where each group of buyers is in the marketplace at any given moment of time, and we know how houses are bought and sold because the financing ratios stay exactly the same every place in Canada for the last 40 years. So you're able to figure out where each of these groups. Now, we measure actually 8 different classes of buyers. So when we measure those 8 different classes, we do that so we know exactly what's happening with the market. So when we're giving information, when we're giving forecasts, when we're telling people whether they should buy or hold, our ability to time the market, it's based on it aggregating all of that information. So what your listeners should understand is this. Even though condominium sales are off, were off, now I'm going to give you the exact, 18.25%, not 20, it was 18.25%, March over March, year over year. Areas like, what do we got here? New Westminster. Their sales were virtually identical. So even though there was 111 sales in New Westminster in 2016 March, and there was 119 this March. So we're only different. There's only a difference of 8 sales. That difference in 8 sales, though, shifted the geographical mix towards New Westminster because total condo sales were off 18.25%. New Westminster's increased. It went from 5% to 6.5% of the total sales taking place. So we have a shift there. That put pressure on the New Westminster market the same way that it put pressure on the Coquitlam market. In Vancouver, generally speaking, all of the greater Vancouver, your first-time buyer threshold rate as of in March, so I'm going to go data back to March because these calculations are precise, was about around $420,000. So in other words, the first-time buyer who was going to the bank to get qualified for a mortgage with 5% down was being approved for a mortgage that would allow them to buy a $420,000 house. But what everybody forgets out in Vancouver was that little first-time buyer loan program that the government brought out, which created an artificial up to a $37,500 increase in which you're able to afford to buy. What we also know that people in the 420 qualification ratio generally would take around about $23,000 of that available loan. That's what they would qualify. That's how the numbers work. That's how you would add to the market. And that would move those buyers into that price category. Now, what's ironic is that's exactly what's reflected in the numbers. What the regular consumer doesn't understand is that because of the trade-up buyers, those average selling price are being skewed because they're no longer restricted almost to first-time buyers. Now it's first-time buyers and trade-up buyers. And trade-up buyers aren't just going to buy one-bedroom condos. They're going to buy 2 or 3-bedroom condos, which automatically skews the median selling price in a neighborhood. So this is where you can start to use some of the metrics a real estate board releases. You can go check and look at how much is the median selling price changed in Coquitlam, for the sake of the argument, between March of 2016 or March of 2017. Well, it's increased $120,000. The median selling price increased $120,000. At the same time, the average selling price only went up 18%. If you have the metrics that we use, we know that median to average sale price ratio in Coquitlam tells us the trade-up buyers were starting to buy at the market at an increasing pace. It had nothing to do with house prices going up. First-time buyers had a threshold that was reached at when the lowest interest rate, 5-year interest rate hit, which was about 2.29%. Even though we were able to get 1.99%, 2.29% was about 2.29, 2.34. That equated to a $420,000 purchase price, which, when you added in the extra $23,000 of new money from the new program, cost another $23,000 inflation. So we know that not all $120,000 in Coquitlam increase in the median was possible. We do know that when you look at the trade-up buyer, because when you take all of those things into account, on their purchase, they were able to spend about $180,000 more than the first-time buyer was. Magically, when you put those two numbers together, the median selling price increased. This is how mathematically certain our commentary is about a housing market. And it's why all your listeners are so fooled. What people don't know is that Pitt Meadows, Maple Ridge, the location where, generally speaking, you've got your lowest price condominiums in all of Greater Vancouver. The number of sales that took place there, folks, doubled between March of 2016 and March of 2017 because first-time buyers were being shut out of the other neighboring low-priced condominium areas. So they, in turn, simply turned to Maple Ridge, Pitt Meadows. Those sales in that marketplace doubled. It went from 50 to 98, doubled. At the same time, the median selling price only increased $68,000. Well, $68,000, I think that's the exact number we talked about, first-time buyers being able, within $10,000, first-time buyers being able to afford to buy when you added in that additional loan from the BC government, no interest loan for 5 years. So when we're looking at our numbers, Jim, when we're looking at all the numbers, we take all of these things into consideration so we know what's really happening. And this is how house price illusion is created. You didn't hear anybody say, hey, Coquitlam sales stayed basically the same, but their trade-up buyers, probably people who lived in Maple Ridge, Pitt Meadows, jumped over, bought their trade-up condominium in Coquitlam.
And as I said, too, and as I said, Ross, the big reason for that is Coquitlam now has SkyTrain.
Right. So even though there were 10 fewer sales in Coquitlam between March of 2016 and March of 2017, 10 fewer sales of condominium apartments. The share of sales increased in Coquitlam because the entire market had dropped by 20% in all of Greater Vancouver. So unless you know where people are moving and how they move and how the geographical, in other words, okay, now the concentration's increasing in Coquitlam and it's dropping in West Vancouver. Unless you know all these things, you shouldn't even be discussing prices. Unless you know how that first-time buyer interest-free loan from the BC government was impacting the market, you shouldn't even be talking about prices. Unless you know what share of sales is first-time buyers in the condo market and what share is trade-up buyers in the condo market, you shouldn't be discussing prices, because it's all house price illusion. House prices have nothing to do with the houses. It's got to do with how much money the bank will lend the buyers that are looking to buy. And that mix of sales constantly evolves over a cycle. The pattern repeats itself over and over and over and over again because it has to. A first-time buyer purchases a home. The owner of the home, the first-time buyer purchased, then goes and buys their next home. When they purchase a home, the owner of that home then goes out and buys their home. When those people purchase, then that allows another homeowner, existing homeowner, to trade up to another home. This is how a housing market functions. If anyone thinks it's the exact same 32%, 33 and a third, 33 and a third, 33 and a third, first-time buyers, trade-up buyers, executive trade-up buyers, you're dreaming. Because that's not how the system works. There is not a steady flow of first-time buyers. Now, first-time buyers do follow a seasonal pattern themselves. That seasonal pattern is dictated by interest rate changes, not by the weather. There is a certain seasonality in each province in Canada, but the seasonality isn't the same. We produce another metric that shows us exactly where each group of those people are getting into the market and how they impact the average selling price over a 2 to 3 month window. This changes every single time, people, for 40 years. Now, I've given you a lot of data here today. I'm referencing Real Estate Board of Greater Vancouver stats, so I'm not auditing them. I'm not saying anything where you have to have our data. We're looking through every certain set of circumstances. I'm letting you go back to their charts that are posted on the Real Estate Board of Greater Vancouver and pull these metrics up yourself. Pull up March of 2016, download it, download March of 2017. You'll see that apartments sales in Maple Ridge, Pitt Meadows have increased by 50%, or by 100%. They've gone from 50 units to 98. You'll see that the median selling price only increased $68,000. That's because that's where your first-time buyers went, folks. There obviously there's a couple of other areas in Vancouver that they went to, but I stayed focused on these 4 areas so that everybody knows. Because I also want to explain something else to you. When you have trade-up buying going on in the condominium sector, in that segment of the market, in other words, where you have a first-time buyer buy somebody's condominium, and that condominium owner decides to buy another condominium at a higher price, a higher quality condominium, then you will also see geographical changes. So when I look at Vancouver East, the area of Vancouver East, they only lost a total of 28 sales between March of 2016 and March of 2017. Their share of the sales stayed virtually the same. It only changed a 0.5%. The median selling price in that area increased $87,000, which, using our metrics, would be indicative of almost a dominated trade-up buyer buying in Vancouver East. the median price increased 20%. The average price increased 20%. That's how precisely these numbers go. So your listeners who call in and say, why is Ross saying what he's saying and we're seeing what we're seeing? What you're seeing is house price illusion. It's the illusion that allows real estate agents to make commissions. The illusion ends up being wiped out when reality sets in. Reality happens in a house price correction. Our explanation of which your market had already corrected last fall comes to be true when you change all of these differences in sales mix to making it all the same over time. The second you make that mix go back to what it was, you'll see that the 28% drop we're talking about across the entire market has already happened. It's just going to take you folks a long time, like even longer because of this stupid ill-fetted first-time buyer loan. It's going to take you longer because that loan was put into place. But that has already happened. The mix has already shifted. The only reason you're getting hearing about these higher selling prices is because all of a sudden there's a little bit of extra pressure in a certain category of condominium in a certain geographic location, and that has to be let the market work its way out. Once it's worked out, that's where you see the house price declines that have already taken place.
We'll have more with Ross Kay right after this.
Lotus Ventures Inc. is a BC-based medical marijuana company poised to launch into the rapidly evolving cannabis sector. Lotus is in the final review stage of the Health Canada approvals to become a licensed producer, having arranged facility financing of up to $12 million, plus building permits for its prototype indoor production facility. Shares trade under the symbol J on the Canadian Securities Exchange. Visit our website at lotusventures.ca.
Keep informed. Receive our weekly recap of thought-provoking articles, podcasts, and radio delivered to your inbox for free. Sign up for the HowStreet.com weekly recap on our homepage, HowStreet.com. Welcome back. We're speaking with Ross Kay. Ross, we've already been chatting for half an hour here, but there's a few things where we want to get to before we wrap up the show. Rising interest rates and banks making it harder to get a house mortgage. Just what is that going to do to the Canadian real estate market, especially after Labor Day?
Rising interest rates mean lower house prices. It's equity and debt. As mortgage rates change, go up, housing prices have to drop. There is no escaping this. They can come up with any solution that they want. It makes no sense from a market fundamental standpoint, and you cannot change it. We use a metric, Jim, called the ITV. It's the interest to payment ratio. Any of your listeners can calculate this on their own. Your interest to payment ratio changes as the interest rate rises. It makes your house more costlier to own. If you're not monitoring your interest to payment ratio, then you don't understand why rising interest rates cause housing prices to decline. That is unavoidable. But it was a 2% interest rate increase that effectively came into effect in April of this year. So post-April, you are now seeing, especially in the GTA, the impact of a 2% increase in interest rates. Interest rates going forward, barring another change to the OSFI on trade-up buyers, which there is a high percentage chance they are going to implement that rule if the market has not rolled over enough to scare them off. You're going to see a secondary hit in the market. So you won't just be a market slowdown. Slowdown is dictated by first-time buyers. Obviously, if first-time buyers are not buying resale homes, the resale market dies. This is why condominiums, if you've got a lot of new condominiums that first-time buyers are buying, the resale market will slow down naturally. Rising interest rates mean lower house prices. End of discussion.
Ross, thank you so much for chatting with us.
Hey, thanks a lot, Jim.
If you have any questions for Ross K. or for any of our other guests on the show, you can email us at info@howstreet.com. You can check us out on YouTube at Talk Digital Network or on Twitter at Talk Digital Net. I'm Jim Goddard. Thanks for listening.
Comments made on HowStreet.com radio are an expression of opinion only and should not be construed in any matter whatsoever as recommendations to buy or sell any financial instrument at any time. Available online at TalkDigitalNetwork.com. HowStreet.com radio is a production of HowStreet Media Incorporated.